Chairman. Chairman Powell, as a member of the Intelligence Committee, I'm deeply concerned about the threat of Iranian cyber attacks on our financial system as retaliation for our strikes on their nuclear facilities. In its cybersecurity report last year, the Fed acknowledged that critical infrastructure, including financial services, is at risk with rising geopolitical tensions. Iran has a history of targeting American infrastructure companies and financial institutions and banks, which could obviously threaten and cause economic damage. What actions is the Fed taking now to monitor and defend against Iranian or proxy cyber threats targeting our country's financial institutions?
So we're in touch with the other regulators and the parts of the government that work on cyber, as you know, and we're in touch with the banks to say, for people to be on the alert for things like that to happen, and also we're on the alert because we're a target as well. So you're right to raise it. It's a big issue, and
do you feel like you have the resources right now to be prepared for that?
Yes, I mean I think we do. We spend a lot, and the government generally spends a lot on these things, and but you can never ever be comfortable in this area because the bad guys are always getting better. So we need to get better.
Thank you, Chairman. Switching gears, the President and members of his administration have recently called you out, various name calling for certain decisions you've made. I know that some people worry that the President's bullying will impact your decision making. I know you work together, and I know that and respect, obviously, your independence greatly. Anything you want to add and give you a chance to reiterate your independence to the American people?
Yeah, I would just say we're focused on one thing, and that is we want to deliver a good economy for the benefit of the American people. That's it. And anything else is kind of a distraction. I don't mean to refer to any particular thing, but we stay focused on that task all the time. We always do what we think is the right thing to do. And, we live with the consequences. And I don't know how else to do the job.
Right, so the name calling and the Mr. Too Late and all that stuff, the American people shouldn't worry about that. You're focused on being independent.
That's what I care about. I care about doing the job for the American people. The things we do matter a lot for people's lives, and that really concentrates the mind. You want to just stay focused on that task. As long as you're sitting in these chairs that we occupy, focus on that task, do what you think is the right thing, and take the consequences.
Thank you, Mr. Chairman. You've previously stated that you view stablecoins as a form of money. Payment stablecoins are already being used for both retail and wholesale payments, as well as for settlement. Recently, this committee passed the Stablecoin Act, and the Senate passed the Genius Act, both aiming to establish clear regulatory frameworks for fully reserved dollar-backed payment stablecoins. Given their design to maintain a stable value and be redeemable for U.S. dollars, should the SEC or other regulators explore treating these stablecoins as cash equivalents for accounting or financial reporting purposes?
So let me say, I think it's a great thing that bills are moving. We need a stablecoin framework on that particular issue. I don't have a view for you. I can come back to you on that.
I'd be grateful. Thank you. High rates have also caused, as we've discussed, the cost of paying off our nation's debt to skyrocket. The CBO estimates that interest payments will cost the U.S. $1 trillion in fiscal year 2026 and continue to rise to almost $1.8 trillion by FY 2035. How do you see us continuing to be able to afford to pay off our debt at this rate? And as the U.S. continues to borrow, how does that impact your decision to keep or cut rates? Obviously, foreign countries like Japan, who are significant buyers of our bonds, have started decreasing their purchases significantly. Other internal pressures worldwide are having that impact. Are you worried about this global issue?
Fiscal policy and it really is not our job, and it's not something we take into consideration in making monetary policy. That's really elected people's jobs, and I would add that for some time now, the U.S. federal fiscal policy has been on an unsustainable path, and I'll limit myself to that.
Last question. Last week, you chose to keep rates steady, and families in our state, as you'll hear from a lot of people today, are really struggling with the higher cost of borrowing and putting off bigger purchases on things like cars and homes. As a result, their wallets being crushed by these price hikes and obviously the president's tariffs. What do you have to say to Jersey families who are struggling with higher costs, and how you look at how they should forecast themselves for their own families?
We're committed to returning inflation sustainably to 2% and keeping it there in the long run. And what we're doing now is we had cut rates by 100 basis points, so they've come down quite a bit. And when the time is right, I expect that will continue. and that will depend on economic factors, in the coming